Welcome back to Freedom Finance with Lanny. On today's video, I'm actually going to walk you through me screening stocks, particularly dividend stocks, right here, right now, as we gear up for the week of February 20th. So in the video, I'm not only going to show you the site that I use, but I'm going to show you the stock metrics that I use, why I'm using those stock metrics, more of the background around there, for what stocks shake out from the stock screener. And hey, we'll take a look at a few of the stocks that I may even add to my stock watch list and stocks that I plan to buy this upcoming week. So get ready, get your notepad, get your Excel sheet, your Word doc, whatever you need to take notes and watch me screen for stocks to hopefully help you on your investing and personal finance journey. So let's get to it. Let's dive in. All right, guys. So first, let's go to finviz.com. That is the site that I use to screen for stocks to see what's going to pop out on my stock screener or my dividend stock screening radar. So to start, let's hit screener. So once you're at the screener place, I like to use a market capitalization of over 2 billion. So why do I use that? Well, this really looks at larger or largely traded companies, those that have, stock price times the share count equals the market cap. So these are typically your bigger stocks and companies that are out there, such as, your Johnson & Johnson, your Apple, your Microsoft, your ExxonMobil, Chevron stock. So larger companies is what that really refers to. Then I like to use, a baseline. Right now we'll use a dividend yield of, over 2%, which is over the S&P 500 right now, which is around 1.6, 1.7%. And next, let's slide over to the fundamental tab on finviz.com. And I'll look at a price to earnings ratio of under 20 because the S&P 500, the stock market trades at 20. What is the price to earnings ratio or PE ratio? That's how, from a multiple standpoint, how large or how, valuable this company is. If they earn $1 a year, stock price is $15 a share, that's 15, price to earnings ratio. Or if they earn $1 and they trade at $25 a share, that's a 25 PE ratio. So you can really see if there's value or undervalue, out there in the market. And I like to look at forward earnings or forward price to earnings ratio. That's looking into the future. I also want that to be under 20. Preferably, I want the forward PE to be less than the current PE because that means future earnings are higher than current earnings. I want EPS growth to be positive over the next 5 years. I also want earnings per share growth to have been positive, over the last, 5 years. So not only in the past, but the future. Next, let's look at the current ratio. The current ratio there in the middle of the screening metric, I want that to be over 1. And that is your current assets divided by your current liabilities, or really saying, hey, how fast can this company pay current debts with current assets? Current assets are, line items such as your cash equivalents, accounts receivable, investments, inventories, and the like. And really your current obligations are your current bills that are due, maybe your current portion of long-term debt. And, so you take those assets over those liabilities, and I want it to be able to pay it over at least 1 time. And then I like to look at the quick ratio. That's got to be over at least half. So what's the difference between the quick and the current ratio? As I get that question a lot, is the quick ratio is the same equation as the current ratio, but in the top part on the current assets, you actually back out items such as inventory because, hey, maybe you can't turn the inventory fast enough. So you still want to be able to, pay off current obligations at, an okay rate. Now, because I'm a dividend investor, let's look at the dividend payout ratio. I want that to be under 60% because that way companies show that they like to pay their shareholders, but they also like to reinvest back into the business. So we are already at 66 stocks right now in this screener. So we already have whittled it down. We started out with hundreds of stocks. Next, let's sort it. If you click the market cap column 2 times, you'll sort it by the biggest companies to the smallest companies. So we are literally looking at companies as large as ExxonMobil at 439 billion in market cap, Merck at 273 billion in market cap, Cisco, ticker symbol CSCO, at 206 billion in market cap, and so forth. And then I don't like to look at these columns, so I actually hit the custom metrics. Then when you click on custom, it kind of gives you a little bit more of what, of your favorite metrics. So here you can see I'm looking at PE ratio. We can even zoom in, forward price to earnings ratio, and payout ratio. So here, let's look at the 10 largest stocks on this list. Right now, we've got, obviously I've mentioned the first 4 or 5. We have UPS coming in at 5. A lot of energy here on the list right now. More than likely based on how high of performing stocks that they have been. We've obviously got UPS and FedEx battling over who's the best transportation delivery service company. So out of these 10 to 20 different stocks, I own UPS, I own Shell, Cisco, General Dynamics, Archer Daniels Midland at 14. I own Cummins at 16, and I also own 18 LyondellBasell. So when I look at these companies, I already know I like UPS. I'm probably going to add them to my stock watch list and may even end up buying shares since I'm underweight in my stock portfolio of that company. I've been eyeing down Cisco. The reason why Cisco is nice is because their current ratio is 18 and that forward earnings ratio is 13. So they're expected to earn more in the future. So they're trading at a fairly good discount right now. And the payout ratio at 54% is relatively safe on the dividend. So there you have it. This is how I screen for stocks to kind of look at the stocks that I'm, interested in buying or acquiring. I typically like to stick with stocks that are currently in my stock portfolio. So in this case, I'll be looking at Cisco, UPS, and probably LyondellBasell, those 3 stocks. And really interested in UPS right now simply because I've been trying to get to 100 shares of UPS and I'm not quite there. So right now the metrics, based on the above, they're fitting that criteria and they definitely deserve a spot on my stock watch list. So there you have it, guys. You now saw how I look at stocks on finviz.com, the stock metrics that I use, literally what stocks I'm currently looking at. Obviously it looks like UPS or United Parcel Services, it's going to be high on my watch, possibly stocks to buy list right now heading into the week of February 20th. Let me know in the comments if this helped you or whatever questions you have on the stock metrics. I'm here to help. I'm here to help you on your financial journey. Again, subscribe to the channel if you haven't. Definitely give the video a thumbs up over here. I truly appreciate it. And guys, let me know what other videos you want to see that will help you, either on investing or saving. I'm always here to help better your financial position. This was Lanny from Freedom Finance. Talk to you guys on the next one.